This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So we're going to spend some time talking about candlesticks and talking about short-term moving averages and how they can be applied to give us a massive edge to see when we're seeing a shift in the shorter-term trend. All right, I want to go through that in detail, and we're going to go bar by bar. If you have any interest in learning some of these techniques, I would suggest starting with my book. You can click the link in the description to find out more about that. Also, if you do enjoy this content, please hit that like button and also subscribe. So now, before I get going, I did want to make sure you understand what I'm going to show you is on a daily chart, but this can be applied to a monthly chart, even a quarterly chart. If you want to use it for long term, it will work. I've done it for years this way. It's a very powerful tool as you start to go up into higher time frames. It can give you a real good idea of what's going to take place. If you use it on a monthly, like what's going to happen over, say, the course of the next 2 to 3 months, at least a high probability event, all right? Okay, let's get going with the American Express daily chart, all right? And now I've stripped everything off. I do have the volume at the bottom that can be helpful, but what I've done is I've shaded out the 18 MA. We no longer have the 40 MA on here. We only have a simple 4 moving average, and it's kind of like an orange color here. And I also have the midpoint of each bar, all right? So that's a simple moving average, just so you know how that works. Let's just take a quick peek. That would be high plus low divided by 2. That gives you the midpoint of each bar, all right? That's in gray. Now, what we're showing here is essentially what I'm doing is I'm looking at the short-term trend, okay? This is a 4 MA. Now, why is that the case? Because the 4, in a lot of ways, if we're on a daily chart and I'm looking at a 4, it loosely represents the 18 on the hourly time frame, the next lower time frame. All right, so if I have a rising 18 here, a rising 4, that means that the 18 essentially is rising on the hourly. All right, so that's kind of how we're looking at this. Now, don't come back in the comments and say, hey, this isn't the same. It's not exact. It's close enough. All right, and each time frame, there's a little wiggle room for each one, and I'm just telling you, it works well enough. All right, now if you notice what happens, we have the midpoint playing in one direction to start, and then we get this kind of bottoming bar. It's a gap down where we make a move down. We start to see some buying come in. Now this looks like a negative day, but that's actually buying coming in. You can see because we get stretched away from the 4 MA, and we close at below the midpoint, but the volume is expanding, and that's the low. And then we basically gap up the next morning and push back to the 4. So we know there was some buying showing up on that in that area. And then the next bar is an inside bar, all right? And then we go and test the open of that inside bar the next day, and then we take out the high of it, and that's kind of the start of new trend to the upside. Why is that the case? Because now the midpoint is above the 4, and both of them are rising. Now you'll have these little pullbacks in the 4 along the way sometimes, right? But we're looking at the fact that this is closing above the midpoint, it's closing above the 4, and the 4 is rising. And again, we have these hesitation bars, but we're rising above. And we have rising midpoint and a rising 4, and the midpoint is above the 4, right? So we have this short-term uptrend in place until we get up to this bar here, and we get a flip of the shorter-term trend. Okay, the shorter-term trend is essentially you take this red bar. You open kind of testing this last green bar, and then we come back down through, and we close below the 4, which is starting to turn down, which is starting to turn to the downside, and the midpoint crosses down below that. All right, and then we get another negative bar where the midpoint is below the 4, and they're both declining. And then you get this counter rally bar, but the volume's not that great. And the following bar is a gap down with stays inside of it. And then we get another bar that stays inside of it. So we have back-to-back inside bars inside of this one bar right here. All right, so here's the high and the low, and these 2 bars stay inside. So this bar stays inside. Both of these 2 bars, if you slap them together, have stayed below this inside this bar, right? So then the following bar, notice what happens. The 4 starts to decline. The midpoint crosses down below, and we get really the start of something to the downside again. Now all of a sudden instead of trending to the upside, we're trending to the downside. Again, we get those little counter trend moves sometimes when we get too far away. You see how this is too far away? This bar gets stretched away. It closes above the midpoint, and but it's well below the 4, which needs it, so it needs to snap back to it. It does that, and then it continues to the downside. Now we get a big volume bar on earnings that ends up being tested. Now I want to point this out because I think this is important. This looks like a bottoming bar, right? So we get this kind of big volume and it looks like a bottoming bar. But if you go and look at the hourly, in a lot of cases what it looks like is a down move and then a rally. So if I were to look at what this actually did, it made a move to the downside and then it rallied up. So it looks like a rally back into resistance, okay? So you got to keep that in mind when you're watching these. When they look like bottoming bars, go and see on the lower time frame, is it really a bottoming bar, or is the volume on the way down and then they rally back up on light volume? Okay, so I'm not saying one way or another on this. I don't know. But you have to go check that out. This does sort of look like a bottoming bar because we didn't see any further penetration other than this, which didn't last very long. All right. So, but if you notice the way we had it, we still had this declining line until we get this kind of indecision bar in place, and then we reverse and look at what happens. We get the midpoint crossing back above the 4. And then we kind of get a bunch of little indecision bars. There's not a lot of strong, wide range bars here, okay? So, and look at the volume. So it seems obvious to me, I guess, when I look at this, I've looked at these for years, is that we had a pretty strong down move, and then we had a light volume rally back up, okay? And then we get this reversal bar that looks pretty important. Why is that? Well, the midpoint of this bar is starting to turn the midpoint down, meaning the midpoint line down, and then early start of the next bar, the midpoint crosses down below a declining 4, all right, and then we're starting a new short-term downtrend until we get too stretched away here. See how stretched away this gets? And then we get a bottoming tail bar where we close above the midpoint and really close near the high, and then we want to work our way back and test the high. But look at what happens. We end up testing that low again. So we get a bottoming bar that stretches back up, but then we get the test of that bar, both on pretty good volume, right? And then look at what happens. We get back-to-back inside bars again, all right? And then we get a start of a new move. So it's interesting because we come down, we get this sort of consolidation here and consolidation here, and that's the top and that's the bottom. But the pattern that looks really interesting is this first lower high. You see how that's the first lower high in the move? We get the move down, and that's kind of lower high. And then you get a move to the upside with strength, pretty good strength. These bars are pretty strong. And then we get this kind of reversal bar. But then look at the way these all play out. Tail, let me get rid of that. Tail here, tail here. Now this bar is sort of a negative bar, but then we get, I don't know, sort of a little tail there. Indecision bar, and then tail, and a tail, okay? And then we get the start of a new move to the upside here. All right, so I wanted to point out that, sorry about that. I wanted to point out that, you know, we can get this situation where sometimes you get a rally. When you're making a lower high or a higher low, it can come in two forms. It can come in a rally like this, right? So we can get a move to the upside and we get a nice pullback, or we can get a move to the upside and it goes sideways and kind of channels sideways. That's sort of what happened here. So this is the first higher low in the move, even though it's really more of a sideways pattern, and then it kind of kicks into gear to the upside. All right, now, I mean, I think as you look at this, it's just so important to understand how it all comes together. So this is the shorter term pattern, so we can see where we get the start of a new move here, right? Start of a new move here, start of a new move here, and then another one here. Those are all starts of new signals where we're getting a crossover and signals starting to get going. Well, one point I want to make here is if we add the 18, look at what it points out, right? It points out the first lower high here, rally to the first lower high, and then we get a move to the downside, and then this is the first higher low as it turns to the upside. All right, so I love doing this because I think once you start to understand how the shorter term time frames work, you can start to see, okay, this was an important sort of reversal area. When you put it in the context of the 18, it really starts to jump off the screen, right? And then we get too far away from the 4 and we're too far away from the 18. Well, yeah, we're going to come and consolidate and work our way back. Well, now we get a reversal, and now this 18 is starting to turn to the upside, and you get the 4 rising, really the midpoint layered above the 4 and the 4 above the 18, right? I mean, so you start to do this and you start to understand how all these moving averages can really work together. Let's take a look at the last thing real briefly. Now I added the 40. Look at the way this played out. So this rally to the 18 here was inside the zone, right? We were rallying inside the zone, basically a 40 to 18 bounce. One of the patterns in my book and my course, right? And then look at this. We get a move to the upside and we're channeling inside the 18 and the 40. And then we get our move back above the 40, the signal that the trend's starting to move back up to the upside again. So, I mean, it all kind of comes together. I think you need to understand each individual part. This is how in the course, that's how I treat each individual part. You got to learn the candles, you got to learn the short-term moving averages, you got to learn the intermediate-term moving averages, then you got to learn how to use it in multiple time frames, then you look at price structure, all of this layers, you keep adding the layers. And if you can do that, you're really going to have a very good idea of how to take money from the market on a regular basis. Thanks for watching. Let me know if you have any questions.